Hey, my name's Scott Forte. So I'm a realtor. I'm licensed in Maine, New Hampshire, and Massachusetts. I specialize in investment real estate. And today I want to talk to everybody about what average prices in homes are doing and what does that mean for affordability. So the chart behind me, we have our median sales price for homes. And we can see, we'll zoom in a little bit. For 2020, the average price for a house was right around $330,000 in the state of New Hampshire. In 2021, it was just under the 400 mark, and in 2022, we're at 445. And if we come over to this little chart on this side, we can see month over month what that change looks like. So in October of 21, it was at 380. We reached our peak right around May and June at the 460 mark, and then September we had 440. Right, so that's where we are right now. So we're seeing a slight decrease. But here's the overall trend for home prices since 2005, going all the way up to 2022. Now, what does this mean in terms of affordability? So if we look at this other chart, we have the Affordability Index, and this is a great thing from the New Hampshire Realtor Organization. So if we go down, we look at single family homes again. From 2020, that Affordability Index was at 129. For condos, it was at 174. For single family homes, in 2022, now we're at 68. And if we look here again, October 21, we were still at 109 and we're coming down. So what does that affordability index mean? Well, if you read the little chart right here above me, it says the index measures affordability in the region. For example, an index of 120 means the median household income is 120% of what's necessary to qualify for a median priced home with the prevailing interest rates. So while that's an explanation, it's still not an amazing explanation. And I think this video, I want to show everybody what that actually means. So you can see affordability chart right here. You can see houses are less and less and less affordable. To today, it's lower than we've ever seen since 2005. We used to pretty much stay above 100. Now we're down at that 68 number. But what does that 68 mean? So let's go into this chart and do a little looking and some examples. So this column right here is September of 22, and this column here is September of 2020. So the median price for a home in September 2020 was around $330,000. In 2022, it's $440,000. Let's just assume it's an FHA loan where you guys can get 3.5% down. So if you're doing 3.5% down, at the prevailing interest rate at the time was, let's call it 265. Some people had less, some people had more, but let's just use an average. And today we're right around 7.3. So what does that mean for a mortgage payment? Mortgage payments were about $1,300 a month. Today, that's closer to $3,000. Your taxes on the house, assuming that your tax value is going to be near your sales value for this example. In reality, it's maybe 80% of the number, but let's just assume it's the same. Your taxes would be $6,600 a year in 2020 and $8,800 a year in 22. So monthly, that breaks down to $550 and $730. So insurance, let's just say it stayed the same for the sake of argument. Your monthly payment back in 2020 was just under $2,000 a month for a $330,000 house. For a $440,000 house today, that would be $3,700, almost $3,800 a month. So a very big jump, almost double what you're paying. So the median household income in New Hampshire is just under $90,000. So if you look at that monthly, it's about $7,500, assuming that you have no debt, no car payments, no student loans, no anything. What can you pay for a house? Well, after you pay taxes on that, let's call it 25%, you're left with about $5,500 a month walking around money. You can use about 45% of that to qualify for a house for your debt to income ratio. So that leaves you with about a spend of $2,500. So if you can spend $2,500 a month, and this house here at 330, the average house for the average person's income, you'd be right around the total payment mark of $2,000. So $2,000 is under your $2,500. So what you do is you could take those two numbers, right? So your $2,500 and your $2,000, and you divide them, multiply it by 100, and that gives you your affordability index. So that was 129. If we look back here, here's our 129 indicator that we have. So going back to our chart, we have 67 today. So 67, you get it the same way. You look at what it would cost, what you can spend. You're walking around money, you're $2,500. Now you divide that by what it's actually going to cost, multiply by 100 again, and affordability is down at 67. So you have no way to pay for that. So, what's your max purchase price then, and what's your max purchase price now? Well, it's to get this number to 100. So back in 2020, the max that you could spend was 424. And I did these numbers earlier, so that's how I know. So you're right around the 424 mark to be able to afford something. But the average price back then was 330. Today, the max you'd be able to spend is about 283. And at your budget at 283 compared to the 424 is much different in terms of what you can get for a house. And if you go back and we look at, what's the average prices of a house, we can see, let me zoom out for you, that the prices are still climbing. They're coming down, but the average price for a house is, $440,000. So with the average person right now, the max that they could spend is right around that $283,000 mark. So the most people in New Hampshire, the average person, the median person, can't afford to buy the median house right now. So that index is saying, hey, housing is very, very expensive and people aren't making enough. So what does that mean for the future of real estate? Well, if interest rates stay where they are, there's not going to be a lot of buyers to buy those homes on the market. Who are the people that could buy those? A lot of the people that I represent, they'll pay cash for a house, or they'll do larger down payments. They'll do, 20% down or 25% down. So that changes your monthly spend, right? So it's all about managing your payment. So if you're walking around money is $2,500 and you can put 25% down on a house because you have equity in a house, or you just have 25% from 401k or something like that, this budget goes up. And you can see, you're now within your means for a $350,000 house. So for first-time home buyers, unfortunately, they're going to be priced out of the market for a little bit. And with that limited amount of buyers now, so we're eliminating, let's call it first-time buyers from the market, the whole buyer pool goes down. And with supply and demand, we're thinking potentially prices could come down because there's less demand in the market. So we will see if demand actually comes down. Only time will tell. But right now, prices are at an all-time high, and that had to do with, artificially low interest rates from the Federal Reserve. So this was a little dive into what average prices are, what affordability index actually means, and then what you can spend on a house in terms of real numbers, 2 years ago versus today. So I'm Scott Forte. If you guys need some real estate help, I'm very happy to help. You can go to my website, scottmforte.com, or just feel free to reach out in the comment section, and look forward to chatting with everybody.